Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. You know the stories today. Coronavirus continues to spread. Market is continuing to react to that, but also a lot of earnings and some big ones too. Facebook, Tesla, Microsoft, a dozen others, 24 others that we're not going to be able to get to all of them. If you have earnings reports you'd like us to discuss, aside from the big ones, drop them in the chat. We will try to get to them today. Speaking of the chat, the premarket.benzinga.com chat is working. It's being a little bit finicky, but it is working. Refresh your page, and if not, try going to the chat on youtube.com/Benzinga TV. It's working. It's just being a little bit finicky this morning. Our guest today is Steve Sears. He's a Barron's columnist, also the author of The Indomitable Investor. He would join us at 8:35. Joel, what's going on here in the overnight session?
Some red, Spencer. We're down 27 handles at 32.45.75. I had a little pop off that open, not much. Got 5 points above the open, 32.77.50. That's your pre-market high. I think a lot of people would just like to see unchanged today, or maybe just get over yesterday's low at 65.25. We have gold in the green by 8.80, 15.84.80. Silver in the red by 22.3 cents at 17.71. Crude moving towards $50, down $1.21 at 52.12. And Bitcoin, kind of another light volume day here. It's down $20 at 9,505. I think all those people that bought it up over the last couple of weeks are not willing to sell, but we'll see what happens with Bitcoin when it makes a little run here at 10,000. Triple D, right on the screen again here.
Well, red on the screen for really not again for the first time in a couple of days, which is starting to make more sense. I mean, we said yesterday, I called yesterday's rally a gift. I tweeted out multiple things. I mean, it was writings on the wall here that this virus is going to probably worsen, and eventually the market's going to be worried about it again. We forgot it. Apple earnings helped it for a day. We forgot about it yesterday. We started to remember yesterday afternoon. While we got a harsh reminder and a slap in the face here overnight. Spencer, just give us, there's multiple headlines here. The cases are up. That's not crazy, but they're up again. But I think this headline coming out of Japan is a catalyst. I saw the S&Ps fall significantly on that. And then also from the World Health Organization, some commentary there as well.
As far as some numbers, more people have now been infected with this than they were with the SARS virus. About 7,700 cases confirmed. About 170 of those people have died, and the World Health Organization is meeting again today to decide whether or not to declare a global emergency because of the epidemic here. So the Japan headline you're referring to, they had sent a chartered flight to Wuhan to get some Japanese citizens back to the country, and there was apparently some infected people on that flight. So this is just on a kind of continue what we've been talking about for the past couple of days. We knew it wouldn't get better. It would get worse before it got better, and that's what's happening.
Well, and the market didn't know that, though. We knew it on this show, but the market didn't, because the market was buying the dip 2 days ago like it was going to be immediately better. I was just head scratching for the last 2-3 days. Obviously, we were very concerned Monday. I said, I hope we get a rally that we can sell into. And that rally obviously came in the last couple of days and gave you a good opportunity. For the first time, I'll just tell you how I'm approaching it. Actually, first, let's just expand on the Japan headline, because it was the catalyst for at least the initial sell-off last night. We were trading relatively flat on the S&P, and then that Japan headline broke. So 3 nationals test positive for coronavirus back in Japan. Obviously, that flight came from there. So everybody is obviously at risk who was on that flight. Hopefully they have those people contained. I don't know if they do. That's a big question mark, and I think a big question mark for the markets. And the S&P fell 10 points when that headline broke. So, more cases around. Obviously, still the epicenter is, where the majority of the cases are coming from. So, like the World Health Organization is saying, it's not a full-fledged emergency here yet, but it's still very, very scary. And the situation is very scary. And I've been nervous for a few days. If you've been listening to the show, I lightened up my portfolio in the last 2 days. I sold a number of stocks out of my long-term portfolio. And I also bought puts on the SPY. I also bought puts on some airlines. So just playing the bounce. I mean, fading that bounce, classic fade of the bounce. I sold my iRobot yesterday in the 54 handle. I sold Etsy. I sold my Twitter. I sold I'm just trying to remember. I sold my Kohl's. I sold a number of stocks out of the long-term portfolio. I have the most cash I've had probably in a decade in my portfolio here right now. So, and especially when you consider the hedge that I put on partially to hedge part of it, not completely hedged, still long overall, but definitely lightened up into this rally the last couple of days because I feel like it's a gift. The market wasn't reading the tea leaves, and I still think they aren't. And you know what? You might get a rally here again. So you might get another chance here again. But I think when we look at this a week from now, I think the market's going to be substantially lower.
Take out the coronavirus as a catalyst,
Sure.
right? I mean, and I like to look at that from that perspective. I mean, even before that happening, you look at the gains from 2019, tacked them on in 2020. Very extraordinary market coming into an election year. Also, I mean, usually the market performs pretty well in an election here, but I think you got a lot of circumstances going on here. Besides this coronavirus, and the expectations for the market just to keep going up and up and up and up and up is just not a realistic expectation. It's good for the market to back and fill. It's good for the market to come in a little bit, consolidate, and grab some momentum. Unfortunately, it's something is the instigating this that's a horrible thing. So
Yes.
you can look at it from a lot of different angles here. I think for me, my trigger point today and moving forward is going to be Monday's low. So far we came down to Tuesday's overnight low. We're getting a bounce. We're not bolting out of here, but that's my key, 29.33. That was your low on Monday. So if you think there's all the people that bought the dip on Monday and didn't do the short-term trade and get out, that's an uncle point for me. Under that, I'm looking for under 3,200. I see a January 8th low at 31.81. Folks, remember the way we went up earlier in January. And if there's anything you should know from learning and listening to this show, the market goes up incrementally, up like an escalator, down like an elevator. So that is, the circumstance. Just basic market dynamics here is what we're looking at.
Yeah. So you're saying even without the virus, there may have been, this is a catalyst to take some profits. So let's say they contain the virus. It's just a good excuse to take some profits. So the buying the last couple of days, those buyers are obviously the ones yesterday are being proven wrong already. So you did stuff in your long-term account though too. And I just want to get into this. So you're obviously a little more nervous than you're letting on here as well. Let's talk about, what you did with some of your long-term. What did you buy? You bought some puts as well.
Yes, I did. Very, very similar to what you did. Really don't like to lighten up the holdings, that much buying and selling and seem to miss out on things like that. But I'm getting a little bit later start than you on this, but this is something, you don't like to do it in the hole. Like on Monday when I wanted to do it in the hole, I waited. I started yesterday, and it's going to take a day or two to to figure out exactly what to do, what holdings. I mean, I'm super high cash anyways. I'm a chicken.
Well, age is a factor there.
Yeah, exactly. So just
I would say I'm sitting probably now in my stock portfolio over 30% cash. So I went from probably I don't know, 10 to 12 to 30 in the last 2 days. So I raised a substantial amount of cash. So still long overall, not going short the overall market. My trading account, I do short and I do different things. And people are asking about some of these, some of the stocks from the coronavirus list that we talk about. I am long some of those stocks. Yes, I'm long in NVC. I'm long a few because I believe that this is going to get uglier. So that's the play. At least, that's what I believe is the play, is some of these stocks. But it's still just, portfolio allocation. So I was talking with my long-term investment hat on there, and I just feel like I think I'm going to get an opportunity to buy stocks a lot cheaper. I don't think the end of the world is coming here, but if you look at what market did through SARS, and the market, and obviously, I don't have the statistics in front of me, but in Ebola as well, the market was down over 10%. We can safely say that. And I think they were saying it was close to 20 with SARS. So it was down substantially. I mean, here we are sitting down yesterday, 1.5% from the highs. I believe this virus, I truly believe this virus is going to be worse than SARS.
It's hard to compare because the markets were totally different environments. That was at the back end of a long-term bear market. And
yeah.
This is in the midst of a long-term bull market. So
it's still the market though. And I'm just saying, when we were talking the show yesterday, when I actually tweeted out the market is nuts, I tweeted that yesterday. Who's buying this thing 1% off the highs with this much, stuff going on over in China? I mean, like we were saying on the show, even if you don't believe that, this is going to, come over here, the damage it's doing to the GDP in China, it's got to be enough for you to I need to maybe lighten up some of these stocks with multinational exposure. And there's a ton of them there. And there's a ton of them still sitting near the highs. So I think if you're buying the dip, I think you're on the wrong side. I think this is a sell the rip market. So at least until they get this thing contained. Once they get the thing contained, maybe I remove the hedges, maybe I just lose. And like I was saying, the insurance was so cheap. Who's selling insurance? Like the market makers, like when I literally was putting SPY insurance on for 1.5% 4 weeks out, 1.5%. And if you wanted to go, it was anywhere depending on where you picked your strike from 1 to 2%. So insuring your portfolio for 1.5% through the next 4 weeks sounds like a no-brainer to me. And I didn't insure it all, but I insured a chunk, and by buying puts. And obviously, I was buying those puts when the SPY was 327.80, 327.90 yesterday. So we're down 40 handles in one day. So those puts are going to be worth a lot of money here today.
But you're not touching them. But you're not
touching. I'm not buying anything today. I'm buying nothing. So I think this is just, honestly, I think this is just the beginning of a serious market correction here. But this is my thoughts, just my opinion. And, I've been saying this for the last, through 3 days. So we're going to move to the earnings here in 1 minute, because I know maybe people don't want to hear this stuff anymore. But I think if you're buying the dip, I think you're on the wrong side of the trade. That's my opinion.
All right. I want to talk about Facebook here. I have thoughts on this Facebook report. So to summarize Facebook here, the last quarter was okay, and the conference call was really bad. So let's get to both of those factors here. Let's start with the numbers from last quarter. As far as the numbers versus estimates, they were good. EPS $2.56. That's a 3-cent beat. Revenue 21.08 versus $20.89 billion. That's a beat. Daily active users 1.66 versus 1.65 billion. That's a beat. Monthly active users 2.5 billion is in line. Average revenue per user $8.52 versus an $8.38 estimate. So that's a beat. So the numbers were all good.
Yeah.
What they didn't like was slowing growth, specifically in North America. This is, I think, the third or fourth quarter now in a row that North American revenue growth is slowing. I think it's down like 36%, the growth rate that is, over the last year. But then we get to the conference call, and this is where it gets really bad, in my opinion. There's a really good Twitter thread about this. If you don't follow Jason Kint, it's Jason_KINT on Twitter. You really should. He's got really good thoughts on the digital media and advertising space. And he was listening to the call, and the key point is where they said, expect deceleration of revenue due to global privacy laws. The majority of the impact is ahead of us. That's what the CFO said. The majority of the impact from global privacy laws is ahead of them. So you could tell they tried to like underplay it and tried to say they didn't really go into detail about how it would affect them. But this Twitter thread from Jason Kint does a really good job of outlining just the massive threat to Facebook. So Facebook gets 98% of their revenue from advertising. And they get their advertising by harvesting user data and giving it to advertisers and allowing advertisers to target users based on the data that Facebook provides to them. So if there's going to be a global backlash, and there already is with GDPR in Europe and browsers like Firefox and Safari changing the way they collect data and then data they provide to Facebook. If there's a global backlash to user data collection, and Facebook gets 98% of its revenue from advertising that is based off user data collection, there's going to be, of course, there's going to be a backlash. Of course, there's going to be a slowdown in revenue. So I would be really concerned about Facebook here. Numbers aside, again, earnings, revenue, it was good compared to the estimates, but I would be really concerned about Facebook here long term, knowing that they get all their money by collecting, harvesting user data, and we really haven't seen the full breadth of the backlash to that yet. I think the worst is yet to come. So that's why I'll be worried about Facebook here.
I'm still long it.
Okay.
So I stuck long it. I'm worried about, and obviously I'm in this from a lot lower. This stock was really beat up over last summer, and that's when I bought my shares. I'm sticking with it. I hear your concerns though, and they are legitimate. Stock is probably trading down not only on the earnings report, but maybe, with some of this other concerns that you're talking about. Down 17 handles, it's significant. I'm not buying any dips here today. Like I said, again, because of the overall market and the virus, I'm not buying any dips. But if the virus wasn't on the table, I'd be interested in this on a dip. But with the virus on the table, I'm not buying any dips.
It's not bouncing.
I'm not bouncing.
Yeah, I 205.11. That's your pre-market low, and then it's just been eerily quiet here for several hours, trading between 206 and 207. Someone here definitely firm offer at 207, 207.50, and they're just hitting bids here. So bids are not exactly, disappearing, but man, this thing's not bouncing. No one's lifting offers. Bids are getting hit. People are whatever, if they have the options or they have the straddle or they're playing against the puts or something, someone's bringing some stock in. If that 205.10 holds, I'd be a little bit surprised on that. I do see a pair of lows in the mid 203.5 handle. Right. And those called 203.75, your next stopping point. And then you just might want to think about 200 today. I mean, I don't think that would be out of the realm of possibilities. Just
it's come a long ways. It's possible.
Yeah, $5-6 away. So it's tough. I do not own this one. Never had owned it. Never will own it. But
never say never. Boy.
Well, what, I never will on Facebook? Okay.
I would love to know. The average age of the Facebook user. I bet it's in the 40s. I bet. I think young people, which is
it's Instagram.
I've heard that for a while.
Yeah, but Instagram's the moneymaker here.
No,
so let's be fair.
But I'm referring to Facebook specifically.
The legacy isn't their golden child anymore. The Facebook
no,
it's Instagram.
Yes, right, exactly. Instagram, and even Instagram is being threatened by like TikTok and these platforms.
It's going to always be changing. I believe, there's a lot of smart people that work at Facebook that are going to be on top of the changes as well, though. So maybe I be proven wrong on this one, and maybe it's the overall market.
But Instagram, it's the same way. They make their money off taking your data and targeting ads to you. So what's going to happen if we really
who doesn't do that, though, in social media? That's what they all do.
Right.
Isn't that the business model?
Yeah, and Facebook is the best at it.
Well, Google's pretty darn good, too.
Google has other stuff going on. I mean, you're right, but Google has other stuff going on too.
Google, you want to talk about regulators and regulator risk. Look at the Fitbit deal. I mean, Fitbit is trading at 660. There's a 725 bid on the table here in cash. It's trading at almost a 10% discount because you know what? They don't know if they're going to let Google buy anything. Fitbit is a drop in the bucket. If they block this Fitbit deal for Google, and that's what the risk arbs, it wouldn't be trading at 660 right now if the risk arbs didn't think there was a risk that this deal doesn't go through. So, if they block the Fitbit deal, which is what's the dollar value on this Fitbit deal? A couple $1 billion?
Pull it up quickly. Let me hold on. I
What
got
what is that? Does
down.
anyone have the timetable on that? That's very interesting.
$2.1 billion.
They're going to block $100 trillion company from buying a $2 billion company because they're worried about this. I mean, the risk arbs it may not happen, but the risk arbs sure think there's a possibility of it, or it wouldn't be trading at 660. So it wouldn't be trading with a 10% discount to takeout price if the risk arbs didn't think there was a potential that they blocked this deal. That if they block the Fitbit deal, and this isn't, they were just talking, I'm looking from a risk arb perspective. If they block this, they're never letting Google acquire anything ever again. I mean, it'd be ridiculous. It'd be absolutely ridiculous if they block this deal.
I'm not saying you're wrong to be worried about Google, but I don't know what the percentage of Google's revenue comes from ads. I'm just saying that 98% of Facebook's revenue comes from ads, and if
I gotta think Google's really high.
I'm sure it's high. I don't know if it's that high, but 98%. That's
I bet you it's over 80.
Higher business,
yeah.
Right? So, if we get some real legislation with teeth, beyond
it's a risk
beyond just other beyond the browsers making. Safari and Firefox have made changes and to how they allow sites like Facebook to take user data, right? So it's not that easy anymore.
It's a great point you're making, Spencer. It's a great point you're making, and it has some merit for sure. So with that being said, I'm sticking with my Facebook here. I'm in it from a lot lower. I sold a lot of stocks into this rally. I'm not selling Facebook 17 points down, but I do agree with even looking at this chart. I think this is going under 200. So I'm willing to hold it for a little bit here, though. Maybe eventually I just sell this out. Like I said, I'm in it from a lot lower, but the thing made a new all-time high yesterday. Yes, the earnings report wasn't great. Yes, there's these other concerns here. From a multiple perspective, and obviously I'm a valuation type guy. It's one of the cheaper tech stocks. I think it's trading 21 times earnings. But
I think Joel has thoughts on the pre-market chart again. You want to?
No,
it's just not bouncing.
Right. No, this is fine. Move on. Next. Facebook.
Next. It's not bouncing. Next.
Market's bouncing.
Thanks to Raymond James for the strong buy.
Oh man,
appreciate that.
That's another thing too, from just a technical standpoint. Everyone piling in yesterday.
Holy mackerel, was that bad? It was we give props. A gutsy call.
Very gutsy call.
They look really bad right now, though. That's why when you make these gutsy calls, when it works in your favor, you look awesome. When it doesn't work in your favor,
how long can you switch your rating?
As awesome.
Like, can you come out today and go, it's a strong sell? Like, do they let you do that like one day?
I don't think so.
Oh, strong buy. No, strong sell.
It's supposed to be like, these analysts aren't supposed to be changing the rating every other day. I mean, there's 12-month targets. They've done their homework and analysis. I'm assuming some of this homework takes, weeks sometimes, probably, if not a month,
probably
together. Yeah. So I would assume that they're not going to just turn around and say, okay, yeah, we were wrong and the quarter wasn't as good, but the quarter wasn't even that bad, like Spencer was saying. Maybe the quarter, it's other worries.
Right. Last quarter was, again, it was fine.
Not that bad.
It was fine. It was just, it's a question of slowing revenue in the future. Yeah. Let's move on to Tesla here. Speaking of great reports, has there ever been a better earnings report in the history of earnings reports on Wall Street than Tesla last quarter? I would argue. Probably, but
well, it was a good report.
Tesla was great. Here are their numbers. Q4 adjusted EPS $2.14 versus a $1.72 estimate. Sales $7.38 billion versus a $7.02 billion estimate. Q4 vehicle deliveries 112 or just over 112,000 cars. They guided that for the year they would comfortably exceed 500,000 units. They gave some delivery numbers for guidance numbers for the Model 3, the Model S, the Model Y. It was all good. Everything they said, it was good. They're ahead of schedule on the Model Y. It was all good.
Good numbers. CFO did say next quarterly impact could be somewhat impacted by the coronavirus. That was said, and they knocked a little bit of it off then. This thing was happily trading at 650 last night. It's obviously down. This is the overall market that's taken a little bit of wind out of its sails. We're down 16, 17 points where we were trading from last night after hours. Where it goes from here is still, a big guessing game. I mean, it was a good quarter. High expectations were priced in. It was a very good quarter. Is it going to give it all back? I don't think so. It's Tesla. It's short squeezed. It's loved. I mean, there's no stock that is more loved than this one here right now, it seems like, or at least, that's hated so much by the shorts that they're sticking with it and they keep getting squeezed. So it's a difficult stock to just, call when it's up 50 points here this morning. You can chase it. The straddle we had priced out, I believe, what was the straddle? $60?
Yeah.
This market makers are pretty good at. So, anyways, if you just bought the calls, you're making money. If you bought the straddle, you're now not in the money. So impressive, that's just goes to show you buying straddles just doesn't really seem to work very often.
That's probably who brought it in when when we went to 659.95, stopped ahead of just
Got
660.
overdone.
Yeah, anybody with the calls or
Yeah.
a whole lot of calls and a whole lot of protection, people locking in profits here. Apple, I'm just going to talk about what Apple did yesterday. Definitely different
please.
stocks, but Apple, man, it made that pre-market high at 27.90. 327.90, and it dipped around all day. You come up in a regular session, you go to 327.85. Wow. So that's if you really want a juicy target in Tesla, I'd look at that 659.95. I don't know. Just the way this pre-market chart looks, I just think there's some patient profit taking going in this. Hard to really even see where support is because the top of yesterday's range is way down there. But congratulations to Tesla. Anyone long the call, along the stock, need to drop 50 points to fill the gap from yesterday. I don't see that where that's happening.
Jeremy Newsom was long. He was pretty happy about this. So congrats, Jeremy, as well.
Just to give you an idea of on that 2020 sales guidance where they said they're going to deliver 500,000 cars comfortably, the analyst from Argus said it's a great thing to hear. He said it was mind-blowing, the guidance. So the people are really keying in on this comment that they're going to comfortably deliver more than 500,000 cars this year.
They also said that they see profits every quarter potentially going forward, other than they said, when they were launching new products, but they basically said we're going to be profitable going forward here. At least that's what, was completely implied here. Yeah. So that commentary didn't hurt either. I mean, saying that they're going to be profitable going forward. And they just said just when we're launching products, new products, that might be the only time we operate at a loss, but they're pretty confident they're going to be profitable going forward. Takes a lot of the bear thesis off the table.
Yeah, I mean, it was a great quarter.
We're coming in though. So 629, 630, market's going up. Tesla's doing its own thing. So not exactly sure why it's fallen off substantially now, but we just fell $5-6 more here in the last few minutes. So maybe there's some commentary coming from an analyst or something, but it's giving back some of it.
All right, let's move on to Microsoft here. This was also a good report, and they gave guidance on the conference call. So the report said earnings per share $1.51 versus $1.32 estimate. Revenue $36.91 billion versus $35.68 billion. So a beat on both of the headline numbers last quarter. Again, moving on to that conference call. I'll read you what the CFO said, Amy Hood. She gave some guidance. She said total revenue for the year will be in the $34 billion range, which is where analysts were looking for. And they said that it's all about the cloud with Microsoft. Cloud growth is continuing to drive them. Cloud software revenue would be $11.5 to $11.7 billion for the and going forward. And it's the growth rate for Azure hasn't slowed down. So it's all about the cloud.
Company is firing on all cylinders. A quarter that was just as good as Apple's, but let's take a look at what Apple is doing here this morning. So if the market continues to be ugly, and as I'm predicting, I think the market's going to get uglier next week. And I might be wrong. You're seeing Apple give back the majority of those gains here this morning. So with that being said, I'm absolutely not buying micro. In a normal market, this could be a gap and go situation. I don't think these are normal markets though. And I think when we look at this a few days later, I think this is potential to give it back just because of market effects. Nothing to do with Microsoft. Great quarter for the stock. Just hard to buy something up $6 with, at all-time highs with so much risk in the macro picture.
Take a look at 176 if you're looking for a target here, and we're only $1.40 off that level. This was in the after hours trading after the headline number. I'll give you the high in 3 15-minute brackets, 175.99, 176.20, and 175.87. What that's telling you is someone's targeting here the 176 area. So I would use that as a target on the upside. Of course, you blow through that. Greener, 177, 178, 179, 180, 200, 220, whatever you want to call. But on the way back down here, since you made that high, 173.20 is your support since 6:30 a.m. So that's the early range, 173.20, 176 in Microsoft.
So many big earnings from last night.
So many big ones. Let's go to PayPal. Someone threw that in the chat earlier. PayPal reported after the bell yesterday. Q4 adjusted EPS 86 cents versus an 83-cent estimate. Nice beat. Sales 4.96 versus 4.94 billion dollars. So a beat on both the Q4 numbers. Q1 EPS guidance they gave was a smidge light. Q4 sales guidance also a smidge light. Fiscal year guidance for the EPS was also light. Fiscal year sales guidance was in line. Actually, that was light as well. So it was light guidance, good earnings.
They've rallied this. They bought the dip in this thing last night. I think I saw it down below 110. Where did they take this down to, Joel?
In PayPal.
Last night after hours. This was I think in 109.
Oh, yep. That quick dip. They bought the dip. 108.75. You would have got hit on your 109 bid. Nice rally off that level. Let's see. From that 108.75 low, you rebounded all the way up to 240. Oh, near 214, nearly 215 there. So wide range here. It looks like you have shorter term buyers coming in at the 112 level. Looking at yesterday's range, you had a down day. 115, it's going to be a good area of resistance. That was yesterday's low. So that's what I'm using as resistance. Man, that 109 or that 108.75.
I think that's safe for now.
Yeah, I don't know. This is a tough one.
It's a tough one. You're right. It's a tough one. I love this company. Again, the situation is with the overall markets here having me spooked. Nice rally in the market here right now. I hope we can rally back up because I'm actually going to sell more stocks. So I know like I've got, puts and that's probably hitting those, but I hope we go back and I hope we can get back into the green here today. I'm going to sell more stocks. So I don't feel like I sold enough. So anyways, let's move on. PayPal.
GDP. They like that GDP. Fourth quarter
Sure.
GDP annual rate that comes in line 2.1%.
Algos will buy all this stuff. Algos are still trading on all this stuff, but the overall factor, I don't know if that's with this virus out there, if a lot of this short-term stuff matters. Initial jobless claims are good. So they're liking the data. Good. Let it rally back up. Square, I want to talk about Square for a second. What an incredible 3-day move for this. They brought this Square, and this trades in sympathy sometimes with PayPal. That's why Square is down here this morning. Also 151,000 shares to sell as an imbalance for Square too, which is significant there. I am long Square. I didn't sell any of my Square. Still love this company. I think on pullbacks, and if the market turns it around, I think this will be one of the stocks that lead us out of here if we do eventually get past all these macro worries. So I'm sticking with the Square. On a pullback here in other markets on a pullback, I would be like, I like Square on this pullback with PayPal. But again, I'm not buying anything for the simple reason I'm worried about the overall market.
The most loved stock on the pre-market prep show, Square, loved by Dennis, loved by Sean Emery. Sean, Sean
Spencer
Udall,
likes it too. Are you long Square, Spencer?
Not direct. I mean, I'm having like an ETF.
Oh no, okay. I thought you might have been one that
just about everything if you got an ETF, but no, that's
that's the fun part.
It's
true.
So we're trading down a little bit in sympathy. Big 3-day move here. Let's go fill this gap, over the, if the market can give a little bit of love here, you got a big old gap between 70, 51 and 80. You got the 76 yesterday. So Square bucking the trend and down a little bit in sympathy. But if you're trading this and you want to, you're looking for this to have a good day, get back up there and test the high, you want to get green first. That closed yesterday at 76.16.
Yeah, obviously PayPal's having an influence on this, but if the market goes to rally and get some of these losses, I think this is a stock that could actually end up even shrugging off the PayPal sympathy and going green. It's been a really good one. I'm sticking with it.
Let's do one more report before our guest. Dennis, do you have any preferences or
Mo? Everyone's asking about Mo.
Mo? Okay, we will do Altria. That's from this morning here. The Q4 adjusted EPS was in line, $1.02. And then sales net of taxes was $4.8 billion, which was just a smidge light. 4.88 was the estimate there. So in line on the EPS, slight miss on the sales figure. The guidance they gave for the fiscal year, they guided EPS of $4.39 to a $4.51 range, and they lowered their EPS growth guidance by a couple percentage points.
I don't see much to really get that excited about in either direction on this stock. So it's pulling back. It's a defensive issue. So it's something that usually doesn't get slammed as hard with the overall market. So, you see the market down. It's not like, I don't know if they're going to go slamming Mo, but the guidance wasn't that great either. They did cut EPS growth guidance from 5 to 8% to 4 to 7%. So that wasn't great either. I was trading a little bit this morning. I'm out of it now, so I can freely talk about it. I don't know. I don't really have an opinion here. I don't have an opinion here at 49 and a half.
The only thing I'd say is it's had an extended rally since October when it got beat up, and and it's just consolidating. It's like it's trying to go higher, then everyone's picking on it at 51 and change. So until you get into the 52 handle, I don't know. This is it looks like a tired stock.
It's hard to get excited about this one.
Hard to get excited about it. All right, we're a couple minutes late here.
I know. We're still waiting for our guest to join us, though, so let's keep on rolling.
We got a lot to cover.
There's a bazillion stocks.
Not like we don't have a lot to cover. So I saw someone mention Coke, so let's do KO.
Yeah, let's do it. Wow, nice rally.
The EPS this morning in line, 44 cents per share. Sales 9.1 versus $8.85 billion. So nice sales beat in the fourth quarter. They gave some fiscal year EPS guidance of $2.25, sales growth of 5% on a year-over-year basis.
I don't have my book open. I gotta think there's something at $58 though. So I'd be cautious buying it here in the 57.90s. I think it'll struggle to get over 58. Just like yesterday when we talked about GE. We threw out that one number, $13.
Yeah.
And it kissed it right on the kisser and couldn't get up through it. So that's your major resistance point for GE. I'm going to give you the same type of number in Coke this morning. The number of the day for Coke is 58. It takes out 58. The defensive nature of the stock could bring it higher. But if it can't, or if it starts to leak away from there, this is a stock that could potentially give some of it back. So I don't want to be a buyer. I'd rather be a buyer at 58.01 as opposed to 57.90, if that makes any sense.
Yeah, nice move for Coca-Cola here. Very, very unusual move. I don't know why they slammed it down to 50. Wow, they slammed it down to 56 for some reason. I saw the company, they weren't going to make any comments yet regarding the coronavirus. They're still going to keep their production and manufacturing at the same levels. So they're playing it close to the belt on that. All-time high that was made. In the issue just a couple days ago. So near up all-time high. Mr. Buffett's happy with this one. All-time high 57.87 trading right there right now.
Steve is joining us in a second. Let's do one more real quick, and let's do analysis paralysis here. I have too many to choose from, and I don't know where to go.
Go jump over to Verizon because it's widely owned. We saw AT&T. Egg on my face from yesterday here. AT&T was down 50 cents, and I was like, I don't think they're going to kill this thing. I think you had good support in the 37.70 area. I was looking at those two lows. They cut through that like a hot knife through butter and slammed it down. And maybe we should have been looking at the Comcast, report from before, because Comcast has continued to leak since obviously their report, and AT&T. Wow, I did not see a beat like that down in AT&T. Also downgraded here this morning, so it's trading down here once again. You go to the next big support level, 36.40. I have no position in this. I'm very surprised they hit it that hard. So, I mean, they're hitting it here again. Verizon's getting hit here too. Verizon got hit very hard yesterday as well. Was there other news in the sector? Because Verizon got smoked yesterday too. They didn't even say anything. Now Verizon comes out. What was the Verizon numbers?
They weren't that bad. The EPS missed by a penny. The sales beat. by a
Holy
smidge.
mackerel, there's
3 or 4 points.
smackdowns here on these defensive stocks.
Yeah.
So Verizon now going to trade right down to all its support, 58. There's so many lows right here where it is right now. But because AT&T cut through their support like a hot knife through butter, it makes me scared to come in here and try to call a bottom on Verizon.
58. Looks like do we get as low to 58? No, we're just kind of hanging here. 58.40 is the pre-market low. Haven't really distanced itself from that area. Oh boy, 58. I do see a couple lows at 58 here, but based on that AT&T action yesterday, I don't know. Nice rally up, long consolidation period here, really since September. So I wouldn't get real worried about that. Wow, under 59. I don't know. We could be breaking out of this long consolidation pattern. To the downside here, nice run up near all-time highs. Still chance to, take profits in this if you choose to do so. All-time high was 62.22. So,
all right, let's bring on our guest now, Steve Sears. He's a Barron's columnist. He's also the author of The Indomitable Investor: Why Few Succeed in the Stock Market When Everyone Else Fails. Steve, good morning.
Hey guys, how are you?
Good. How about you?
Good. Quite an interesting pre-market, huh?
Yeah. what earnings reports have you most interested this morning?
I was watching all of them and going through some of the earnings calls, in particular in which management blames the Wuhan virus, and thinking it's got to be probably the greatest excuse.
You're going to see
in the
that a
history of
lot.
markets.
You're going to see that every company that misses now, they're going to be blaming with the Wuhan virus.
I mean, this stuff is just nuts.
What is your thoughts on the virus overall? Let's just, before we jump in, because we've given our thoughts a lot on this show in the last few days. What's your thoughts here?
I mean, somebody commented at Barron's that automobiles kill more people each day than the Wuhan coronavirus. I think that, provided that it doesn't turn out to be the bubonic plague, which I do not think it will be, and provided that it isn't, going to decimate entire countries' economies and supply chains, it's probably just the latest flavor of fear for the markets. The Chinese government will contain it. They can't allow the world's second largest economy, their policies to be knocked out of control by wild game markets that sell snakes for people to eat. So I think they fix it. I think they get ahead of it, and I think the weakness that that it's causing around the world is an opportunity to buy some stuff at good prices.
I hope you're right. Let's jump over into some of these other earnings reports here. Let's talk Tesla first of all, because this is the stock that we talked about it a couple minutes ago, but I want to talk about it here again. I mean, it's up 53 points here. The stock, it just has an eternal bid underneath it. I mean, somebody was saying it's in the last 2 months, it's increased by the market cap of General Motors. It's an incredible story. What's your thoughts here on the Tesla numbers?
I think the Tesla stock is there are a lot of cynics, and of course people think the books are baked and all that sort of jazz. However, the stock is basically a cult, and the people who doubt it or want to short it, are basically the financial market equivalents of people who go into sects and cults and try to convert people. It's just not going to happen. This is one of those companies, I believe, that is sort of dancing in a ring outside much of what Wall Street can understand. And even the short sellers, quite frankly, tell me they often want to buy the car. So we had a couple of trades that we recommended. I've been bullish on it for a very long time, and I'm not the least bit surprised by the huge move.
What about some of these other reports here? We talked Facebook, we talked Microsoft, we talked Coke, Verizon. Any of them strike you as unwarranted? The reactions, I mean.
Well, I thought the Facebook. I was surprised to see the Facebook being schwacked 17 points lower. I think what my takeaway is thus far from earnings is that people exist in a heightened state of nervousness around these this truth or consequence time on the street, and when they see something like Facebook's growth is not growing as fast as people want, or maybe it actually is slowing, they just hit the eject button. And you look at Verizon. You guys were talking about VZ earlier. BZ's been dancing around in a 2 to 3 point range for a very, very long time. Telephone got schwacked on the job cuts. I think this is just the fast money tango. The biggest trade that ever goes on, to my view, is event-driven trading. So you're going to bid all this stuff up into the print. The number comes out as good or bad. It goes up really high, and if it doesn't, it goes down it goes down perhaps more than merited. I think this is where the vol is, and thus the edge. I think the reactions say more about the state of investors than about the actual companies in most cases.
We're on the line with Steven Sears, Barron's columnist, writes the striking price every week on a definite Saturday read. You talk about a lot of the strategies in your column are selling puts, right? But they're always like cash secured puts. I think that people need to emphasize that. Are you looking at more selling spreads, or the way that you approach these stocks is, hey, if you want to own Facebook at, 195, you set that cash aside in the account if in fact you do get put to it at that level?
Well, I think each options volatility pattern tells you what to do basically for the stock. And I personally have rarely met a downside put option in a blue chip stock that I didn't want to sell. I like the cash secured put strategy because a lot of people currently have cash in their accounts. They're earning very poor returns because I think the 10 years like 1.7-ish. And my other sort of general rule is, being in a public position talking about this sort of stuff is first do no harm. If you're going to buy Facebook, selling a cash secured put's the exact same thing. Are there times when I do spreads? Absolutely. And some people even think, quite candidly, that it's better to sell a spread than it is to do a cash secured put. And I'm not going to argue that that's right or wrong, but I'm going to say that when you have to communicate with a huge swath of people at varying skill levels, many of whom are going to trade based on what's published, I just try to use my it's my Hippocratic oath. The first do no harm, and that's why I like the cash secured put.
Okay. I mean, this is where people get into trouble as they start writing puts, and they start writing puts more than they can afford, and all of a sudden stock has a big leg down, and they're like all of a sudden in a margin call situation because they don't have the cash to come up with that many, and they're obviously the brokerage is going to come in there and then cover that position. So it gets tricky.
One of my key lessons, my grandmother had a cousin. I guess it makes it like my great cousin or something, and we called him Uncle Morty. Uncle Morty every week sold 10 puts. And he and his friends, they would all get together and they would carry these things around in their suit coats. And during the crash of '87, when I was just a wee lad, Uncle Morty got schwacked with a $250,000 margin call, which was a lot of money at that time, and still is. So he covered it. But I've always had a bias since then against trading in margin. And I think that's probably a good rule. And the other thing with options is like guys make stupid mistakes. They don't realize that one contract represents 100 shares, and they make mistakes on the divisor, and they over leverage, and then they get their faces ripped off.
The Uncle Morty margin story. We're going to have to.
Oh, that's a good one.
A great cousin, Morty.
I mean, just before you move on from the subject,
sure.
This is what you see a lot of people, that write puts. And I mean, in the last 5 to even 10 years, you've been rewarded significantly for writing puts. And maybe you've gotten bigger thinking you've got the holy grail. This strategy, just works. But I tell you, if you were writing all those naked puts in 2007, or in the year 2000, those eventually will come to roost, and you will get that ugly margin call because eventually you're going to get this market that doesn't immediately come back. And you're going to get this market, like if you go to the year, and maybe it's probably 2007, 2008 where people got whacked a little bit more because we were coming back substantially. But I mean, there's people writing puts on the banks. And then you've got certain banks that actually go under. I mean, there's always a situation where eventually, if you're just writing naked puts all the time, you'll get paid, and you'll win on 95 or 98% of your trades. but it's those couple of, percent, 2-3% that can make you lose years or maybe even blow out your account if you get over leveraged.
Look, I agree. If you spend any time around the old floors, there are a lot of guys who are swinging a big line who just blew themselves up. And I think in investing and trading, longevity is the goal. And the only way you can really have a long, prosperous career is to sort of maintain a type of paranoia and risk management.
One more question, Steve, before we let you go. I mean, we've had these kind of movements in the markets, different circumstances. I know you're very fundamental. I know you look at earnings. I'm not sure how much you do on technicals, but do you have a point, a level where you would say, maybe it's a little time to lighten up the portfolio, or maybe this is going to be a little bit more, like a 10 or 15% correction? Is it, you feel for the market? Is it earnings? Is it macro events? Do you have something that, that would kind of turn the tide as just another buy the dip opportunity, as opposed to hey, we could have some extended downside here?
Yeah, but they're pretty profound shifts. I'm a huge fan in watching the cost of capital, or the CFC. If the Federal Reserve does something to increase the cost of capital, that would change my views dramatically. That means if interest rates go up. In an easy money world, I think you want to be somewhere farther out on the risk curve. Technical analysis, I look at charts. I'm very interested in trends. But I remember what somebody on the floor of the SIBO told me, which was that all ships at the bottom of the sea are filled with charts.
Yep.
Right. But of course, there are many ships at the bottom of the sea that don't have charts. So to me, it's something that I look at to refine my view. I'm very comfortable taking, as a discipline, the opposite side of the crowd if I think the fundamentals of the stock are merited or misunderstood. And we talked about margin at the beginning. I think margin's a great way for some people. I don't trade this way and I don't recommend it, but many professionals will use margin to magnify the trend. And I think that's fantastic, but the real money's made trying to catch turns. And the way you catch turns is by being on the opposite side of the street of the crowd, waiting for them to suddenly realize that Facebook, for example, is a monopoly and you can get in at, between 80 and 100, that kind of stuff.
All right, we've been on with Steve Sears. He's a Barron's columnist, also the author of the book, The Indomitable Investor, Why Few Succeed in the Market When Everyone Else Fails. Steve, thanks for the time today, and have a good one.
Thanks, guys. Great to be with you.
Thanks, Steve.
All right, let's move on to UPS here. 8:54, 5 minutes left in the show. UPS reporting earnings this morning. Q4 adjusted EPS was in line at $2.11. Sales was a slight miss, 20.56 versus $20.67 billion.
A stock that has held up unbelievably well. Compared to FedEx, this is just night and day, and it's been very impressive. With that being said, it's kind of just been hanging here for a while and hanging above this 112. It absolutely needs to hold up here. I don't know if this is going to be the day it's eventually going to, sell out, but when you go out there, the resistance from 120 to 125 has been very impressive as well. We had the big move back in the summer of 2019. Going up from the $98 to the 120 area. So if you were ever to breach like that whole 110, then it's a slippery slope. So I even call it 112. So it needs to hold in here. That's what I would say on UPS.
Yeah, I mean, on a relative basis, compared to FedEx, definitely has held up well. Trading at 114.40, it's down in the pre-market. It just looks like it's just hanging out here too long. And if you look at the monthlies, you had that big run up. See if you can hold that 112 area. But I have to agree, if get anywhere near back 120, seems like resistance came down to 125. But not going to see 120 today. Triple D, I'm in agreement with you here on that 112 level in UPS.
All right, moving on here. Let's go. There's a couple of biotech and healthcare names I wanted to get to. Let's go to Eli Lilly first, and then we can go to Biogen after that. So Eli Lilly reporting this morning. Q4 adjusted EPS $1.73 versus $1.51. Nice beat there. Sales $6.11 billion versus $5.9 billion. Beat there. They also reaffirmed their adjusted EPS guidance for the year.
It's a good lift. 142. I don't know what's going on there. Again, I don't have my book open. JV Spec, if you've got your book, I wonder if there's something on 142. So this could be a similar setup, with the Coke situation. Coke's come off there. We were talking Coke this morning, 57.90. It's 57.45. So already 45 cents from the level that we were saying was resistance. I don't know if there's something there on Lilly. I should go open my book right now and find out though. JV Spec, if you're in there, you'll be quicker to me. Is there anything in the book in Lilly at 142?
If there's not something in 142, folks, there's going to be something in 143. You hit 143 on the initial pop just before 8:30. Went down a little bit, came back up to 142.95. So don't know what's in there at 142, but great target on the upside at 143 for Lilly, and nice move up, traded at all-time highs.
I'm logging in my book. I'll have that information for you in a few minutes. Let's go do Biogen, the technicals while we talk to Lilly. I'm still long Biogen in the long-term portfolio just because I've been in it for so long ago. I'm obviously still concerned the Alzheimer's drug is not going to get approved, but as one of the analysts was saying that there is a shot at this thing getting approved. That's all that's going to matter here. When we look at the stock 6 months from now, it's all just going to be whether that drug gets approved or not. So this is all just basically noise. Yes, it's going to trade up. Yes, you can trade it short term, but I'll tell you, how nervous. I don't even like having this like in my trading and long-term investment account. I'm willing to stick with it. If it falls to 70, 80 points that it falls because the drug gets rejected, I'm prepared to take that risk. But I'll tell you, from a trading perspective, I don't even like to be long this my trading account. Because I don't want to be hit with, the random news that all of a sudden the stock or the drug gets rejected. Do we have any timeline, Spencer? When they're going to be?
We always knew, I think, it'd be in the first quarter.
Yeah, I think, but we don't have like a day or anything. Like this could just come out of the blue, boom, rejected, right? Or is there like a date that they're going to actually review it? I don't know.
Let me look.
I don't think I've never seen a date.
First, let me give you the numbers. It was
give us the numbers.
Very nice earnings per share beat. $8.34 for $7.92.
Holy, they make a lot of money.
So sales $3.67 versus $3.52 billion. The guidance they gave for their earnings per share and their sales guidance this year was also good. So good numbers. Stock pop. Let me look into if there is a date.
Sure.
I don't know if there is.
Quiet ranges ahead of the report, getting a nice pop up in Biogen on a few different brackets here. You hit 290, seller step down to 289 there. So keeping an eye on 290 as your pre-market high. Your daily charts above 290. I see just one other high at 290.85, then things open up to 94.80. But when I look at this chart, I just look more of a trading range. This thing has been in a trading range, had the big pop up on sudden reversal of fortune for that drug, the Alzheimer drugs that helps heart conditions, I guess. So I just, hold the bottom of the trading range, 271.48. Started to come near that area yesterday or 3 days ago at 276.24. So I'm just looking at this technically in a trading range, kind of getting near the bottom of the trading range. And probably the only thing to shake us out of it will be the announcement on that drug.
Yeah, I haven't been able to find any specific dates.
I mean, that's going to be that's why it's in this range. This is just bulls and bears. So he keeps paying the 280 to 300. But again, when you're holding it overnight, there's that risk that this is going to have a move like 70 or 80 points in one direction or the other on this approval. So you always have that overnight risk. So if you're a short-term trader and you're trading on margin stuff, holding this overnight, just be aware, eventually one day, and probably coming in this first quarter, this is going to have a huge move in one direction or the other. It's a waiting game here for Biogen.
All right. Was there any more that you guys wanted to hit?
Wow, we hit a lot.
I mean, there's a lot we didn't hit.
Well, Las Vegas Sands. I want to do Las Vegas Sands.
Let's do it.
The report was great. I tried to short this last night on the pop. It was honestly up there. There was nothing to hit. It never really. You had to be out there ahead of the print to really get done. And not even on that, it would never got done on any size. So I think everybody had the same idea I do. If Las Vegas Sands rallies at all, we know what's happening with the casinos over there probably, and that their attendance is down so substantially that they're that they're doing whatever they can over in Macau to, they're still open apparently, but they're, cutting staff back, they're doing paid leave, they're doing whatever they can because the attendance has fallen off a cliff. So this is going to impact their next quarter. So it didn't matter what these numbers look like. So again, whatever news algo was buying on the headline numbers is not following the overall story here because this got immediately faded. Numbers, Spencer?
I mean, the numbers, to the extent to which they matter, it was an earnings per share beat, 88 cents for 78 cents.
It's a nice beat.
Sales 3.5 versus 3.3 billion.
In other markets, would they take the Macau thing off the table here right now? The stock would be ripping on this, but this was going to get faded, and everybody was ready to fade this. So it traded up, I believe, to 66 handle last night. There was nothing. It was 100 shares bid at 66 is what I saw because I was ready. I was rearing. I was like, well, I hit the 100 shares. I was trying to get down on more, and I was trying to get done higher. And then somebody hits the 100, and then it's back down. I mean, there was not a lot of size that traded up. So you can see the bar. You can see it trading up last night briefly on it. There was really no way to get down on any substantial size up there, though. I was trying.
All right. You got your pre-market low at 63.36. Fits nicely with yesterday's low here at 63.13. A little trap door after that because the low on Monday was 61.08. So very important for Las Vegas Sands to hold that 63 low. That 2-day low. I don't think you're immediately going to whoosh to 61.08 because people didn't get a chance to do a lot of buying between 61 and 63. So it'll incrementally go down if you breach 63, 61.08. That'd be a great target on the downside for LVS.
All right, I think that'll do it for our show today. I want to thank our guest, Steve Sears, and everyone in our chats. Both on YouTube and premarket.benzinga.com. I've been assured by our developers that the certificate issue with the premarket chat has been resolved, so chat's working back to normal if for whatever reason it wasn't working for you earlier. For a free trial of Benzinga Pro and a discount, click on the link in the description of this video. And to learn more about the upcoming Benzinga Cannabis Capital Conference in Miami at the end of February, go to benzingaevents.com. You can always rewatch our show on YouTube or catch the podcast on Spotify, iTunes, Stitcher, TuneIn, SoundCloud, wherever. Call us 734-494-0246. Email us premarket@benzinga.com. And please remember always, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Everyone have a great rest of your day. We'll be back with you tomorrow.